Brought to you by Chevron, the power of human energy. To find out more, visit chevron.com.
Well, let's take a look at how oil prices are tracking Asia's side. They're currently higher, but only just at 0.2% at 36.01. So let's get straight out to Jonathan Cornefell. He's Asia Director at Hudson Capital Energy, joining us now live from Singapore. Well, Jonathan, great to have you on board. Cash flow again today. A little bit better today, really, Asia's side, but we've seen a lot of bearish trades out over the last couple of overnight trading sessions. Anyway, you know, inventory data, as you said in the break, pretty much more of the same.
Right. You know, yesterday was just more of the same. It's what we've been seeing for the last month or so right now. We saw another big build in crude oil stocks and the WTI stocks. It's actually the 7th build in a row now. So until something happens with these builds, and we're kind of predicting that towards the end of the first quarter, those builds are going to start to decrease. But anyway, you have an enormous amount of WTI crude oil sitting in Cushing, Oklahoma right now, and until the refiners start buying that and processing it, there's really nowhere for that crude oil to go. There's no pipeline really that can take it to the Gulf. It's really just sitting there, and that's just going to continue to depress front month WTI. That's just going to cause the contango that we're seeing across the futures curve to just remain steep, and that's going to be the story for the next couple of weeks at least.
Well, Jonathan, on that contango trade, I mean, it really seems to indicate that investors are really banking on the fact that the economy is going to improve in the second half of the year. I mean, just how realistic is this trade? Well,
when you're looking at futures months in terms of crude oil, it's really not really that good of an indicator of where the price is eventually going to end up. Traditionally, if you look at historic data, it doesn't really end up where it is right now. So it's what we're seeing right now is just the entire curve has come off enormously over the last 7-8 months, and it's just all the force right now is really on the front month as these inventories just continue building. There have been some bright spots here and there. We've seen in China, you've seen increased bank lending. In some supply manager surveys in Australia, in China, in the U.S. and EU, there's also been some bright spots there in terms of demand slowly beginning to pick up. But it's going to be a very long time before the refiners, as I said, start to draw on all those stores of WTI and crude oil and start to draw them down, and you really see the price actually return. It's going to be many, many months before that happens.
Jonathan, you said there were some bright spots, but we've also seen these downgrades, I guess, in forecast for demand coming from the US. Yep. I guess this really isn't much of a surprise, but has it changed your forecast in terms of where the oil price is headed? We're now back down at 36 US. Right.
You know, and my forecast several weeks ago when I was on the show, I said that we thought March would follow Feb and Feb would follow Jan into the low 30s, which is exactly where it ended up right now. And we're really predicting in the second half of 09, as long as you get some kind of stability in the housing markets, stability in maybe the credit markets, and stability in the Forex markets, that's really what you need in the second half of 09 to possibly begin to draw demand back and start to pull the market back up, thinking maybe in the low 50s, maybe the mid 50s, between 53 and 58 for the second half of the year. We're not really looking at a price much higher than that for 09.
Now, Saudi Arabia has come out and said that the current oil prices that we're seeing, they're unjustified, they're unsustainable. It says it's going to sow the seeds for future price spikes and also, of course, volatility. Now, I guess this is one-sided from Saudi Arabia's point of view, but what do you make of comments like these?
Well, comments like that, you know, they're right to an extent. And the problem is that Saudi Arabia, it actually was OPEC that announced about 23% of projects in terms of oil and gas production are being either abandoned or put to the side right now because they just aren't going to be funded right now. That's an enormous amount of projects. Non-OPEC productive capacity. Capital expenditures is being severely cut for non-OPEC production. So the problems that we were having at $130 and $140 oil in terms of a lack of reinvestment in productive capacity, that's going to be so much worse when you're $100 lower, and we're really seeing that right now. And when this demand does begin to turn around, then you are going to see the price jump because speculators and traders are going to see that the market's not going to be able to answer. So as soon as these inventories are drawn down, you're going to have a problem again. That's assuming that demand will eventually return at some point, which of course it will. The question is second half of 09, 2010. That's the big question.
Oh, absolutely. It'd be great if we could answer that one. Jonathan, let me ask you about OPEC then. I mean, we're not that far away now. We're about a month away from its next meeting. Expecting another quite significant cut in supply?
Yes. I think that OPEC may cut about 1 million barrels. They may say they're going to cut about 1 million barrels, follow through with maybe 400,000, 500,000 barrel cut. Now, the real thing that OPEC really isn't watching, they're not really watching the price so much. Everyone's focused on the $75 target, they said, but what they're really watching is the inventory levels and whether or not those inventories are going to increase or decline. And we'll really be watching from the end of the first quarter into the second quarter, and whether or not the inventories continue to build or whether they start to drop off. That will determine even more what OPEC is going to do for the remainder of the year. So price really only plays one small component in what OPEC is going to do.
All right. Okay, a lot hinges on those inventories. All right, yeah. Jonathan, thank you so much once again for joining us on Cash Flow. Jonathan Cornefeld with me there, Asia Director at Hudson Capital Energy. Just ahead, Australia's jobless rate rises, adding to more bearish data, but our next guest says the country's downturn won't be a long one. So that's the good news. Stay tuned.
Brought to you by Chevron, the power of human energy. To find out more, visit chevron.com.
We are explorers, humans are. Today there is a new frontier to explore.